Global markets faced a significant downturn on Tuesday as tensions in the Middle East escalated. Iran launched a barrage of approximately 180 missiles at Israel, dramatically raising concerns of a wider regional conflict. The attack, which followed almost a year of war between Israel and the Hamas group in Gaza, was reportedly in retaliation for the killings of Tehran-backed terrorist leaders, more likely as a retaliation for the killing of Hezbollah chief Hassan Nasrallah. While Israel's air defenses managed to intercept most of the missiles before they could reach their targets, and the attack was declared over within an hour, the financial world had already taken a hit. US and European stock markets plunged following the strikes, reflecting fears of further instability in the region. In response to the heightened geopolitical tension, oil prices surged as the risk of supply disruptions loomed large. Investors flocked to safe haven assets, with gold hitting a new record high of over $2,600 per ounce. Meanwhile, another development in the US added pressure to the markets. Dock workers went on strike at key East and Gulf Coast ports, threatening to cost the American economy billions of dollars per day. The strike raised concerns about the potential inflation spikes, adding to the already fragile mood. The effects of the sell-off spread across Asia. Most Asian stock markets sank, mirroring the drop on Wall Street. Japan's Nikkei fell by 2% and South Korea dropped by 0.6%. Japan has also experienced a downturn soon after Ishiba was declared as the country's new prime minister. However, it wasn't all bad news. Hong Kong's Hang Seng Index soared by 6%, driven by optimism surrounding Beijing's continued stimulus efforts. This managed to lift the broader MSCI's Asia-Pacific Index by 0.6%, though the overall sentiment remained cautious. Amid the global uncertainty, the US dollar remained a go-to safe haven for investors. It traded near its 3-week high against the euro, supported by strong macroeconomic data from the US and inflation concerns in the eurozone. While markets continue to react to these fast-moving geopolitical events, investors are keeping a close eye on potential disruptions in global oil supply and upcoming decisions from central banks in the US and Europe. Meanwhile, the United States reassured the press that no sanctions on Iran were lifted.
This administration has not lifted a single sanction on Iran. We cannot forget that. Rather, we continue to increase pressure. That's what we have seen. Our extensive sanctions on Iran remain in place, and we certainly will continue to enforce them. And you heard from the National Security Advisor. You heard what he said today.